market crash can come back to bite you for sure. If it's good debt, meaning debt on properties that are cash flowing, then I would have as much debt as possible. A market crash, when you're holding a bunch of debt on, say, flips, short-term trajectory type exit strategy, can definitely come back and bite you, because if you're projecting that property to be worth, say, 400,000 and all of a sudden it goes to 300,000, you could be in a situation where you're losing money. And if you do that at a large scale, not just one or two flips, most small investors can absorb a loss on a couple flips, but if you're doing it at scale, taking on a lot of debt, a lot more risk in a flipping model, the market really does crash. I'm not talking about 5 or 10%. Us as flippers, if we can't absorb 5 or 10%, we shouldn't be in the business at all. But if you are looking at a crash of 20% or more, being in a flip, that could wipe you out. If you're in a lot of 10, 15, 20 flips at a time, the market takes a real correction, which we have not seen yet. I don't think the correction that we're seeing now is a real crash. Crash to me is 20% or more. We've seen like 5 to 10%. And like I said, we can absorb that. We have that built into our numbers. At least most flippers do. There's some flippers that got into the business after COVID and they thought this was easy. The market's going up. I buy a property that goes up in value. They're buying properties at like a break-even point the day they buy them, and the property goes up in value so much that then they're profitable at the end. That is a very dangerous scenario, and I think that's why a lot of people are getting hurt in this market little correction that we're having now, because profit shouldn't be able to be wiped out with a 5 to 10% correction. And that's the case on a lot of these flips that people are buying, because they got used to the market the way it was in 2020 into 2021, and now it's a lot different. You have to be a lot more careful. You have to build in more contingency money. If the market does go down 5 to 10%, you have to have that built into your numbers. Since I started flipping, experienced a market like 2020 and 2021, that was kind of like a different experience for me. I've always experienced kind of a normal market. Yes, it was appreciating, but very, very slowly. So I always had a very disciplined approach on my numbers. So yeah, if the market were to correct 5 or 10%, then we absorb it, we move on, we're still profitable. But this model that people have adopted over the last couple of years doesn't work. It doesn't work when there's a correction. So bringing on a lot of debt in a market crash can be dangerous. But if the debt that you're bringing on is for rentals, let's say, and those rentals cash flow regardless of the value of the property, then I would take on as much like that as possible. So it depends what type of debt you're taking on. If it's for flips, then you have to be very, very careful with your numbers. If it's for rentals and those rentals cash flow day one, there is literally no risk in taking on as much debt as you can get. So very different types of debt out there. So it just depends if you're looking at a short-term strategy or a long-term strategy. And if it's for your long-term strategy, if it's cash flowing, then again, you can take on as much debt like that as possible. For flipping, you have to be very careful. Most of my properties right now, I'm buying below 65%, sometimes at even 50% or lower of the after repair value, just because we don't know what's going to happen with the market. If we've seen the worst of it, then great. That's 5 to 10% correction. Depending on the market, we have seen some markets go down a lot more than that, but on average, I've seen about 5 to 10%. If that's the worst of it, then great. But if it goes another 10% or another 15%, I want to be able to sleep at night and not be wiped out by a correction. We've seen the last financial crisis in 2008. So many people get wiped out of the real estate market because values literally went down by 50% in most markets. And when you take on a lot of debt and that happens, you're done. You have to declare bankruptcy. You basically lose all your equity, lose all the money that you had in those properties. So a 50% correction is huge. That doesn't happen very often. And when it does, you see that after 2008. I don't think that's what we're seeing now. There's just way different factors at play. Taking on debt can be a good thing and a bad thing. It just depends what kind of debt it is and how disciplined you are on evaluating your numbers and your different exit strategies. But I'd love to know where you stand on this topic. Let me know in the comments.